Welcome back to Electrified. Today you'll get to hear from Iola Hughes, the head of research at Benchmark Mineral Intelligence. The last time she came on the channel 3 years ago, it was the best interview I've ever done. Two quick things before we jump in. One, I did want to mention Benchmark's Giga USA 2026 that'll take place in DC June 9th and 10th. So if anybody's interested in registering, I'll be sure to have this link below. And no, this is not sponsored in any way. I just asked Iola what I could promote for her as a small thank you for her time. And just getting the word out there a little bit about this event was her request. And lastly, as mentioned, I do want to do more of these interviews on Electrified going forward to provide content that you can't really find anywhere else. And it's just a fact, to continually do that, it's much easier when these videos do quite well. So if you don't mind dropping an early like and a comment, one, to show your support for the guests coming on and dedicating their time, and then two, it's just typical algorithm things. But without further ado, I hope you all enjoy. I did want to try to add some color to Tesla's Q1. So their energy gross margins, 39.5%. A lot of people were excited at first. So Vibob said, we set yet another record with gross margins in this business due to some one-time benefits from certain tariff recognitions. But then Tesla's 10Q said this was not the tariff refunds that were tied to the February Supreme Court ruling, which my understanding was just saying that the president can't put the tariffs in place. Congress has to do it. So do you have any idea what that tariff recognition or refund for Tesla was?
Yeah, not great visibility, I would say. I think there's essentially it would have been some sort of kind of overpayment that would have been made. I think the kind of clear thing from it though is that it can really be treated as a one-off rather than a recurring tariff that we'll see. I think when it comes to the IEEPA tariffs themselves, those are pretty interesting because like ultimately how those are refunded is a big question in the first place, given the scale of those tariffs. But then what Tesla has to do when it gets that refund as well is a big question too, whether they, have to pass on some of that to their customers, because they obviously increase the prices as a result of the tariffs. So there's a lot to work out there.
So for Q1, then it's possibly like an overpayment that Tesla made, something maybe changed in the interim, and then it was a refund, but not anything they should expect going forward.
Yeah, exactly. It seems the most likely. It's obviously been a very turbulent year of tariffs last year. I think we have a tariff calculator that we made early last year, and I think we're on like V27 at this point because each time there's a change, we'll republish it. So it's very easy that things could have been overpaid based on when they're expected to come into the US and when they actually did. So yeah, it's not surprising.
And then are you guys expecting a lot more fluctuation from a tariff perspective over the next 12 months, or do you think it's kind of settled?
Yeah, for sure. So the way that the kind of position we're in now, currently the battery tariffs are sat at 38.4%. So you've got the 25% Section 301 that was increased in January of this year. Then you have the 10% Section 122 that Trump put into place once the IEEPA tariffs were ruled unlawful. And then you have a kind of 3.4% battery tariff that's already been in place. Those Section 122 reactionary tariffs, they can only be in place for 150 days. So that basically gives a window for further tariffs to be kind of launched. And I think it was at the end of March we saw the IRS launch a new kind of probe into for Section 301 tariffs, which would cover like 99% of US imports. So it's like 69 nations they're looking to impose those on. So yeah, it is likely we'll see further tariffs coming through. The level that they fall out at is still a big question mark, but I would imagine around 50% for battery tariffs is not a bad guess.
And then just overall, are you seeing any material slowdown in demand because of this uncertainty where companies are just waiting, or is it kind of business as usual and companies like Tesla are passing along those tariff costs to their customer?
I would say it's just been very turbulent. So when we look at the battery imports coming into the US, they've been jumping around so much the last few months. You see big spikes that happen when there's an expectation the tariff rate is going to change. So the January change of the 301 tariff, we saw a very strong December. And then in January, we saw imports fall back down to kind of 2022 levels. So there has been a lot of kind of pre-buying and wait and see. You also have the added impact of people looking to kind of safe harbor last year, basically lock in earlier tax credit regimes. So that, yeah, it's constantly changing. People have been avoiding the higher tariffs where they can, but in terms of actual demand destruction, I wouldn't say it's necessarily having an impact at the moment, because when you think about the price level that these cells and systems are at now compared to even a few years ago, even with these high level of tariffs, they still come out a lot cheaper than where we were.
All right, guys, a quick break to introduce a very slick new channel sponsor, UPDF, one that I actually first saw back on Linus Tech Tips. If you read, create, interact with PDFs at all, I'd highly encourage you to give this one a shot. I, like many others, used Adobe for a long time until I realized that 1, UPDF was more robust for the things that I do most, and 2, it is 1/6 the price. Of course, it has all the basics. You can add highlights, notes, and bookmarks. But check this out. You can also edit the text right in the same format. So if there's an error, you can fix it right in the document with the same formatting. A real example for me, I work with different sponsors. We send PDFs back and forth all the time for signing. So if there happens to be a mistake in the document, like they put 2027 instead of this year for the upload date, you can just double click, go to edit, right in there, adjust it within seconds. You can easily add custom or preset watermarks. Add watermark, you see all the different templates, or you can create your own. I have signed a few NDAs in my day, so one click away and boom, the document's confidential. For a vibes guy like myself, there's plenty of customization to change the look of the app. I prefer the dark. Maybe you have a scanned document and you want to select the text, but you can't. Just drop it into UPDF, then go to Tools, OCR, Editable, PDF, and Convert. And seconds later, you have a fully editable PDF where you can copy the text or edit it directly in the document. And it's 2026, so it wouldn't be complete without AI tools. You can convert the PDF to Word or any other document format. You can password protect your files with one click. I need a summary of this document. Select your language and then chat with a PDF. And within seconds, there's your bullet point summary, key findings, high level, all the main takeaways, why it matters. And it's using models like GPT-5 and DeepSeek R1. So look at this, I can click on a chart, I can go ahead and copy it, I can paste it into the chat, explain this chart, and there you go. Pretty slick. There's a complete explanation of the chart along with the main takeaways. And yes, if you need to sign or annotate a document, you can create a custom signature up to 6, resize it, move it around. Incredibly easy. UPDF works on Mac, iOS, Windows, and Android, and one account you can use on 4 different devices. You get lifetime free upgrades, and the product gets better every month. Customer service is available 24/6, and they have a 30-day money-back guarantee. And right now, you can get a limited time offer if you use my link in the description below. I highly recommend UPDF for all your PDF needs, and as always, thank you so much for supporting the channel. Now back to the interview. So when it comes to Tesla's pricing, I know a couple years ago they were at like $500 per kilowatt hour. Maybe now if you go to the configurator and run some math, it might be closer to $240 per kilowatt hour. But we know there are volume discounts when, companies buy in bulk. So from what you guys are seeing, where is Tesla usually landing at a dollar per kilowatt hour perspective?
So typically when we see those sort of discounts being applied, around 20% is a good ballpark estimate for that, which relatively speculative, but would give Tesla a price around 190 to 200. Okay. In general, I would say if you're comparing Tesla to the other Western players, Tesla would generally come in towards the lower end of some of them, maybe $30 to $40 per kilowatt hour more. But then when you put it in the context of the Chinese players, the differential is obviously a lot more significant. Right. In the Chinese market, we see systems being deployed for under $100 per kilowatt hour. Those players can then ship to the European market, to the US market. The US, obviously, tariffs start to play into it, and eligibility for tax credits start to play into it. But if we're looking at the European market, for example, it's definitely a lot cheaper to go with a Chinese option than to go with Tesla or one of the other Western providers.
Okay. And is that the case in Australia as well, or is that a different
Yeah, yeah,
situation?
I would say so. Australian projects are now being supplied by the Shanghai Megapack facility rather than Lathrop, which will have brought down costs quite a lot. But essentially they'll still be charging a premium compared to some of the other players in the market, and we are starting to see that reflected in Australian projects where historically that was a market really dominated by Tesla and Wärtsilä and a few other kind of Western names, but now we see a lot of interest, not only of Sungrow, which is I guess a more well-known integrator globally, but also from the players who are cell manufacturers, have vertically integrated into the system side, but are these Chinese players, Hithium, Cornex, CALB, starting to take quite aggressive market share there, and those are the sort of players who have been kind of undercutting and offering very low prices to gain market share.
Okay. And those numbers you mentioned, like, 180 for Tesla and under $100 per kilowatt hour out of China, are those before any subsidies or after?
That's before subsidies, yeah. So
Before.
yeah, once we start playing subsidies into it, it can obviously fluctuate a lot. I guess the main thing to know on the subsidy front for now is that if we're talking about 48E anyway, the investment tax credit, the way those rules are set up, it's based on year of construction. The thresholds start to come in. So the reality is, if your project's coming online this year or even next year, you probably safe harbored it in some form from last year. And what that means is that you can still use a Chinese system, you can still use Chinese cells, and you don't have to worry about losing the tax credit. When we get into late in 2027, 2028 onwards, that's when you'll be placing those projects in construction this year, and therefore having to start to adhere to those rules. And then the economics starts to go, okay, well, it makes more sense to use a Tesla system, even if it's cheaper to get a Chinese system, for example.
Speaking of like economics, so Tesla's 4680s, there's always chatter if and when they'll start using those in a megapack. We know that LFP is the primary battery cell technology for energy storage. Are you guys hearing anything about Tesla considering 4680s in the megapack in the future, or no?
I wouldn't say so. It's not an obvious cell format to use within a system. It would require quite a lot of redesign. So the megapack systems, as well as pretty much all of the systems in the industry right now, are designed around prismatic cells. Prismatic cells are good because you can essentially kind of cube them together very closely. You get a lot more energy density for your footprint. So it really makes sense as the cell format of choice. We do see some pouch cells being used in the market, but the main reason that we see that is because that's what LG manufactures right now. But they're even switching over to prismatic from 2027, which lines up with when Tesla will start to use LG cells as well.
I'm glad you said that, because I was curious about how difficult that changeover would be to use a cylindrical cell. So it sounds like it's pretty difficult. It's not just a simple change.
Yeah, it just seems like something that people would much rather avoid if they can. And for pouch as well, I think it's pretty evident by the fact that Tesla could have off-taken cells from LG much sooner. There is plenty of LG production kind of going around, but the fact that they've waited until, they're saying not until the end of 2027, which is when LG get that prismatic line up and running, is when they will take those cells. So yeah, they don't want to redesign those systems based on that cell format.
So Tesla to date has been earning that $10 per kilowatt hour credit for the 45X at Lathrop, where they were assembling these imported CATL cells into modules, which at 40 gigawatt hours a year is about $400 million. But we got that IRS notice 2026-15 in February this year that added some PFE rules, which is that prohibited foreign entity. So is it true that at this point, because of that notice, that Tesla can no longer earn that $10 per kilowatt hour credit?
Yeah, for sure. So that was that came out in the One Big Beautiful Bill last year, and then the guidance at the start of this year provided a bit more clarity on it. essentially what you're looking at is typically within a pack, the cell would account for about 80% of your cost. So if you're using a cell from China, you're immediately way over the threshold for the allowance. So yeah, you become ineligible pretty quickly.
And so how soon would that go into effect? Like, I'm asking from the standpoint of how soon it might impact Tesla's margins, like losing that momentarily until they replace some of that cell supply. So is that in effect like the end of last year?
Yeah, exactly. Yeah, from the start of this year, it came into effect. Yeah.
So they haven't been earning that at all then in 2026?
Yeah, there's no. The only way that maybe they have is if they have a whole load of cells they brought into the US before the end of the year, built up a bit of stockpile, which they could have done because it would make sense to get those through, and then maybe they could work around the rules that way. But if they're bringing in cells this year and making them into packs, it would be pretty much impossible to get the credit.
And so, speaking of that LG factory between LG and Tesla in Lansing, where you said the supply will start in 2027, just to confirm, that factory is fully expected, given all the changes, to fully qualify for both the $10 per kilowatt hour and the $35 per kilowatt hour cell manufacturing?
So still a bit of question marks, I would say, for the $10 part. It should be okay for Tesla or LG or whoever's making the packs to get that. For the $35 cell level, you need to start looking at the supply chain for LFP, where the cathode material is coming from, where the anode material is coming from. The cathode is the one that's going to be the kind of key material to look at, because that makes up about 40% of your cell cost. So using a Chinese cathode can make you ineligible pretty quickly in the coming years. And that's a supply chain similar to the anode as well, that's heavily dominated by China. So last year, I think we were looking about 99% of the LFP cathode supply chain was based in China. There are moves to move away from China. So in Korea, you have a few manufacturers who are bringing facilities online this year. You have a facility in Indonesia, which is the one that LG is planning to source from. However, there are some issues around ownership structure there. There is a Chinese owner. We're seeing a lot of Chinese companies with subsidiaries elsewhere restructuring their entire company structure or their subsidiary structure to basically make their products in these subsidiaries eligible. So lots of work is going on at the moment to try and basically rearrange the supply chain to make it possible, but it's not an obvious tick box, yes, they will get the credit. There's still, I think, challenges to work out.
Tesla does have a cathode factory in Texas, but do you guys know anything if they're getting into LFP production there, or it's just going to be like an NCM situation?
My understanding is for the MCM side rather than LFP, essentially to supply the 4680 cells.
Since we're talking about it, can you give a brief explanation if that's even possible? Because from what I looked into, it's pretty confusing. But the MACR, that material assistance cost ratio, and just kind of how that works and how it phases over the next few years.
You essentially what you're looking at is doing a kind of sum of the kind of input costs divided by the output costs, and you need to work out what percentage of those input costs come from a prohibited foreign entity. And there's a few different triggers for a prohibited foreign entity based on kind of ownership structure, effective control, and IP as well. You have different material assistance cost ratios for 48E, for 45X, that have different levels of kind of thresholds over each year. The key ones for 2026, when you're looking at the 45X, your PFE allowance essentially is 40%. So when we translate that back into the battery cost stack with a cathode, and I mentioned earlier how the cathode accounts for about 40%, you maybe could get away with a Chinese cathode this year if you assumed every other component came from a non-PFE, which is going to be very hard to do because of the anode. And then that ramps up every year by about 5 to 10%. And from 2030 onwards, you're looking at a PFE allowance of just 15%. For 48E, for the energy storage side, again, you have this ramping threshold, but they're slightly different. So you have 45% allowance in 2026, and then that ramps up to 25% allowance in 2030. The kind of other challenge to consider with this is when we're calculating that cost stack, there's a whole load of variables that come into it that people are looking at. So what we saw earlier this year was some preliminary guidance issued, which basically said that initially you'd be allowed to use the tables which had previously been set out for qualifying for the domestic content adder to inform you of your cost stack, which is available for 48E but not available for 45X. So for 48E, you can follow these previously announced interim tables, and within that, it sets out the cost of each component as a given percentage rather than what it actually costs. So for the battery within a system, it's saying the cell cost is 52%, which means you're immediately ineligible. So the key thing from that is it means that, you know, if you're looking at a Tesla system which is using a CATL cell, that system would immediately become ineligible under those rules. So yeah, pretty big in that sense.
So is it pretty accurate to say then that like retail investors, like a lot of my audience here, really will not be able to determine what exactly qualifies and doesn't unless it's explicitly said by the company, just because we don't have visibility into like these supply chains?
Yeah, so one thing that some companies are coming out with are supplier certification documents. So they're basically providing a guarantee that their system is eligible. Sometimes I think that information will be publicly available. So Fluence came out maybe a month ago now, just putting out a very short press release saying that they would still be able to provide fiat compliant products. So in some cases, you know, if someone is fiat compliant, they'll probably shout about it, or PFE compliant, they'll probably shout about it.
When it comes to like global energy storage battery demand as a percentage of just overall battery cell demand, I think energy storage was around 15%. Correct me if I'm wrong. But then where do you guys see that number trending over the next few years, given the, you know, large pullback from EVs almost everywhere outside of China?
Yeah, so we had last year about 19% of battery demand, and over the next couple of years we have it rising to about just under 30% of the market. The regional difference is quite stark though. So if we look at last year in particular, in the US market, storage counted for about 25% of demand. In China, it was about 20%, and in Europe, just 10% of the market. Over the next few years, particularly in the US, as we've seen this pullback on the EV outlook, we now see storage playing a much bigger part of the picture. So we're looking at this year accounting for about 40% of demand. And, you know, we've seen the cell manufacturers react to this quite accordingly. We've seen a huge pivot to LFP capacity, to energy storage capacity. LG and their kind of pipelines are now saying 50% of the market is going to be energy storage. So there's really two sides to it. It's not just energy storage demand is really strong. There is the underlying tone that the EV demand is ultimately weak. But it's all providing a pretty positive story for the US market at a time where I think it could be a lot more negative. One thing I guess would caveat all of that with as well is that these are based on our Q1 forecast, which is pre-US Iran conflict. I think and maybe that's something we can talk about in more detail, but I think that's going to be a key upside for both EV demand and energy storage over the next few years, and it's really changing the conversation to bring energy security back to kind of front of mind, highlighting how EVs can, you know, protect the consumer from these spikes in oil prices as well.
If you have anything else about that conflict and kind of the fallout from it, please feel free to elaborate.
Yeah, for sure. So maybe talking about energy storage first. We see a few kind of near-term downside risks and then some longer-term upsides. So in the near term, we're currently tracking about 50 gigawatt hours of projects in the Middle East, which are due to come online in the next 2 years. Ultimately, if any of those projects would have their systems delivered through the Strait, we could see some delays to the demand there. The Middle East has become one of the really kind of key areas to watch for storage, so some potential disruption there. On the flip side, we are seeing an increased interest in solar and storage across the board. There's lots of previous examples of where we've had energy crises and we've seen a nation pivot to renewables faster. You can look at Pakistan when they had their energy crisis in 2022. We saw a huge uptick in solar installations, and expecting similar things to be happening now for the storage side. Behind the meter market can react a lot faster, and we'll see deployments uptick sooner there. But for the utility scale market, probably be looking at a bit of a longer time horizon, but the motivation is definitely there for things to accelerate. For the EV market, this is where I think it's been really interesting, the March and the provisional April data that we've been getting in so far, where markets saw the kind of largest jump in fuel prices. We saw some really incredible jumps in EV sales, Australia and New Zealand in particular, having kind of record months and increasing 200-300% compared to earlier in the year. Some questions around how sustained that can be, and whether that's just a pull forward of sales that were expected later in the year. But yeah, the kind of interest in EVs is definitely very high at the moment, and should drive things forward.
Going back to what you said about like energy storage and the fallout from the conflict, and just kind of thinking about the competitive landscape, what are you guys seeing from that standpoint? Like, I'm assuming there are probably new players trying to get into energy storage given the margins and potential and that shift. But is there also a consolidation at the top of people realizing, hey, like this handful of companies, these are the, top tier players, and they're just defaulting to them more?
Yeah, I would say so. We actually just published our 2025 cell and system integrator rankings, and on the cell side, it's quite interesting. We saw CATL. So CATL is still, number one energy storage cell supplier, but they saw their share fall to 22%. I think they were close to 30% last year, and part of the reason for that is because of these. In the Chinese market, you have a handful of players who have been really ramping up cell supply in the last couple of years. So the likes of kind of Lithium, Cornex, Eve Energy, who are all kind of coming through and really pursuing energy storage as their key market. So the competition is definitely very fierce. We are seeing the Chinese government look to crack down on some of this competition, because there's almost too many players who have been aggressively cutting prices. So yeah, I think increasingly we will see consolidation as well. That's ultimately, a bit almost too diverse in terms of the number of options right now.
And so I always just want to hear from somebody like you who's kind of more objective and unbiased. How is Tesla viewed by and large by the industry in energy storage specifically? Are they like very clearly one of the best with all the hardware and software and the integration that they have? Or is the competition really so good now that there are others on par with Tesla, if not even exceeding them in certain regards?
Yeah, I think in terms of let's say like reliability and after service care, and just kind of legacy reputation, Tesla is still in a very strong position, seen as a more relatively kind of premium product. In terms of innovation, in terms of the cell design and the system design, Tesla's potentially lagging some of what we see from the Chinese players. There's been this race, particularly in the Chinese market, to push energy density higher and higher and higher. We see these 500 amp hour cells which have moved to 700 amp hour cells, and now players even working on 1000 plus. And what that means is that you're looking at container sizes which are now offering energy densities which are 5x where the Megapack 1 was offering a few years ago. So the pace of innovation is obviously slower in the Western markets than what we do see in the Chinese market, but I don't necessarily think that's a bad thing, because it does give you time to kind of see what's actually working and react to that, and offer kind of a a product which is the most suitable for a given market.
Tesla does have some next gen products like the Megapack 3, Mega Block. So is the industry starting to talk about those? Is it a bit too soon for them to kind of get into it since it's not shipping until next year?
I think there's definitely interest there, but I think when it comes to those next gen products, it does go back to that same thing, is that it's not necessarily them kind of taking a leap ahead of everyone, but it's more a kind of response to put them in line with where the market's already going.
When it comes to the average number of gigascale projects, like over 1 GWh, I know a couple of years ago, again, correct me if I'm wrong, maybe a handful every quarter. Do you have a feel on how many we have per quarter now?
Yeah, so we had 11 come online in the first quarter of this year.
Okay.
For reference, so in 2023, 4 came online. In 2024, 17 came online, and 2025, 50 came online, and this year we currently have 122 in the pipeline.
Okay.
Yeah, and 11 so far this year. But I think it's worth noting with Q1 as well. It was a pretty interesting quarter. So we saw the market, the utility scale market, increase by 42% in the first quarter. But interestingly, China was completely flat year on year. So all of that growth is coming from ex-China markets. So ex-China increased by about 112%. And really interestingly, Australia actually became the second largest market for the first time, so overtaking the US. They had
Okay.
3 of those gigascale projects. Over 8 gigawatt hours installed in the first quarter in Australia.
Okay, wow. And so from Tesla's Megapack factory in Shanghai, is most of that going to the EU and Australia, or what percentage of that actually stays in China? Does any of it stay there?
In terms of Chinese projects, I don't believe they're actually serving any. There may be some exceptions, but the general expectation there was it was for export markets rather than to serve domestically.
Right.
And that could be anywhere in APAC, anywhere in Europe. But it seems like that facility is still ramping up. In the most recent earnings call, it looked like it was at 40 gigawatt hours, but now it's back to 20 gigawatt hours. So maybe there's been some adjustments there in terms of how much scale they expect that to have.
I think last year Tesla did 46.7 gigawatt hours storage deployed, and globally the deployment number was around 315 gigawatt hours. So simple math, Tesla had roughly a 15% market share globally. Where do you guys see that number trending over the next few years?
Yeah, so we do have a number very similar, about 15%. We have it coming down a bit over the next couple of years, but staying above 10% is really the expectation. There are obviously a lot of variables that do come into it. How successful they are in ramping up their own cell production is a big one. Eligibility for credits is going to be a big one in the US market. And obviously the overall kind of demand picture as well. So a lot of variables, but they're in a good position in terms of potential output they have from the various facilities.
And who would you say is like the player in the industry? Does that exist where most people are like, hey, this company has the very best energy storage products?
I don't think there's necessarily a one player winner, which is probably a good thing. I think on the sell side, CATL's obviously been in a good position because they were an early mover and had that advantage. But you do now have a whole range of other players still offering a very good product. Those players maybe aren't as well fitted when it comes to the system side of things. BYD did very well in terms of shipments of systems last year, took the top spot. So yeah, maybe they're the ones at the moment who are doing the best.
Last time you were on the channel, which was like 3 years ago, you nailed the call about Australia. You said it was the market to watch, and fast forward and it absolutely was. So what are you seeing right now? Like, what is the hottest market globally for energy storage? Is it Australia?
I think Australia is still very, very hot. I think the US is really interesting. I think there's a whole load of opportunity outside of the traditional states, which is going to come about in the next couple of years. I think the whole narrative in the US and how it's essentially kind of decoupled the role of storage from renewables is a real shift from even kind of a year ago, where the outlook for storage was really not looking great. So I think that's a big one to watch. Is maybe people have been underestimating the US because of all the turbulence in the policy side of things. But when we look at the actual kind of pipeline for the next couple of years, it continues to grow very quickly. A lot of confidence in storage opportunities, not just traditional, grid market side of things, but data centers and supporting that build out as well.
What about on the residential side? Since the residential ITC expired last year for something like the Powerwall.
I mean, it's interesting. It's again one that we were expecting this year not to be great for, but the conflict in Iran has, I think, given a new driver to resi markets, where if consumers are seeing that their energy prices are going up, maybe they were considering getting solar panels, maybe they're considering getting a battery, and suddenly your payback period on that is a lot shorter than it would have been. So yeah, not as strong as last year. Last year was a very strong market in the US because of the termination of the credit, and we had a lot of people looking to get ahead of that. But I think the downturn that we were expecting is not going to be as bad.
Okay, that's good to know. Let's shift gears for a second to Powin. For those who may not know, it was I think the third largest integrator in the United States, and they declared bankruptcy. So my question is, can we learn anything from their experience?
Yeah, I think scale and how fast you move is always a big lesson from any of these players, whether we're looking at what happened with Powin or Northvolt is another great example in the European market from the cell manufacturing side. It essentially seemed like they were kind of taking on additional debt to fund their growth, and that became unsustainable. And yeah, basically damaged their position to a point where that was necessary. So it's yeah, I'm sure we'll see further things like this happening in the industry as it grows. Essentially, when you're in such a fast growing market, and everyone is really kind of racing to gain market share, it does get super competitive, and we start to run into these issues.
CATL, they announced their Naxtra sodium ion mass production for Q4 of this year, and they're saying the pricing will be somewhere around 30% below LFP. So of course, as a Tesla observer, is there a world where that could render what Tesla's doing in Nevada with their LFP factory not completely obsolete, but just heading that direction? So is that a concern, or how do you kind of view that announcement?
Yeah, I wouldn't say so. I mean, we also saw last week or a couple of weeks ago, the first kind of large scale sodium ion offtake. So CATL announced a 60 gigawatt hour sodium ion offtake with sodium ion with Hyperstrong for those sodium ion cells. So there's definitely a lot of movement in the sodium ion market right now. What I would, I guess, caveat that all with is whenever the lithium price goes up, we do see a lot of excitement around sodium ion. Whether that's as a hedge against lithium price, whether it's to help control the lithium prices, or whether the kind of reality is there that it is competitive, is true. We've done quite a lot of cost analysis on this to see how it stacks up, and the big issue right now is around the anode. So you use a hard carbon anode rather than graphite that you use in lithium ion, and that is still very expensive compared to a graphite anode. And what it does mean is that even at the current lithium price, and even a quite a bit higher lithium price, it's still cheaper at the moment to use LFP versus sodium ion. As sodium ion scales, of course, there is potential for that to come down, but it's not end of this year it's going to be 30% cheaper. I think that's a hypothetical if everything goes smoothly. And then the other thing just to note on in terms of impact on Tesla is it's another supply chain which is entirely focused in the Chinese market for now. So it doesn't solve any of those kind of issues around compliance and qualifying for tax credits if you're just switching to a different Chinese supply chain.
So do you foresee Tesla maybe doing something with sodium ion, or is it still maybe too early for that technology?
Yeah, I mean, potentially. I don't think there's any obvious signs at the moment. I think get LFP up and running first, and then yeah,
You know,
maybe long term is an option there.
did I hear you correctly? You said when the price of lithium goes up, then the interest in sodium ion goes down?
No, it goes up.
Goes up. Okay. Yeah, I was going to say,
Exactly.
wait a second. Help me understand that.
No, it goes up. Goes
Okay.
up.
So there was an announcement between Google, Excel, and Form Energy with a 30 gigawatt hour project in Minnesota, which I think might be the largest project ever. And it's iron air. Again, not lithium. And I believe somebody involved, Matteo Jaramilli, is ex-Tesla. Is this some sort of inflection point for long duration storage, or again, this technology instead of lithium, or is it more of a one-off in your view?
Yeah, so we've seen quite a few of these announcements recently. I think we saw a 100 gigawatt hour one as well, and a whole range of technologies from like iron air to flow batteries to all sorts that are being explored. Long duration definitely has its place on the kind of more traditional grid. The market mechanisms don't necessarily exist for these sort of batteries to be used in a profitable way. So the incentive to install it in traditional grid applications is a lot lower. When it comes to data centers, that's where we see a really good use case. Bridging grid connections for peak shaving, and often used in conjunction with on-site gas as well. So yeah, I think as well, like a lot of these announcements that we are seeing, they are relatively exploratory at this stage. Quite a lot of these
Okay.
companies are quite early stage. And these projects that they are kind of signing themselves up to will be the largest projects they've ever worked on. So how much of it is basically the tech companies kind of going out and giving a bit of money to all of the different companies to see which one succeeds, rather than making a sure bet on or one or the other.
Okay. So the idea that iron air at even a data center where it sounds like it makes more sense is not really a concern for stealing LFP demand from data centers. Is that accurate?
Yeah, exactly. There's
Okay.
you'd look to have both in most cases.
Okay.
Yeah, you start to look at very different kind of use cases for the different techs. With some of these longer duration technologies, you start to run into issues with things like round trip efficiency can be very low. Your kind of reaction time can be a lot slower. So for some of those more traditional battery use cases, LFP is still kind of chemistry of choice.
What two things are you guys watching at Benchmark over the next 12 months or so that could possibly change Tesla's competitive position in the market?
Generally, what happens in the US in terms of policy, in terms of tariffs, I think is all going to play into it in quite a big way. It will really determine how competitive Tesla can be. If they're facing very high tariffs on battery imports, that's obviously going to be very difficult for them. At the same time, it may be prohibitive for other players, so getting that right is going to be a big thing. And then, yeah, the ramp up of the Nevada LFP lines, when that actually does come online, is going to be pretty interesting to see how they can do that, and then also like how they've worked out their supply chain sourcing for that one as well. They also
Yep.
need to consider where their cathode is coming from, where their anode is coming from.
Yeah, I did want to touch on that one more time. So for that factory in Nevada where they're using CATL equipment, I believe, to manufacture LFP cells, that was my understanding. Does that line qualify for the $10 per kilowatt hour module assembly? Could it possibly qualify for the $35, or what's your view on that?
Yeah, so the aim would be the $35 part. They're in a pretty unique position where they've been able to essentially use equipment or kind of license, because that was put in place before the bill came through last year. They've essentially kind of safe harbored that agreement. So they're in that position, and then also the Ford CATL licensing agreement is in that position where it was put in place before, so it's okay. So from
Okay.
I guess, licensing position, they're okay, and they should qualify. The key thing will come down to their materials, where they're coming from. So yeah, where the cathode is coming from, where the anode is coming from.
But the $10 per kilowatt hour for module assembly would not apply
Yeah,
for that?
that should, that should as well.
It would
But
too.
whether they do that
Okay.
there or probably at Lathrop, I would guess.
Running up on our time here, one more question. What would you say is one of the most, or to most underappreciated things happening in the energy storage market now that most people aren't talking about. So it could be a chemistry, a region, a policy, a company, anything.
Maybe one thing that is quite interesting we've been hearing from a few developers is how poor some of the after sales service is kind of that they're experiencing in the market from different integrators, and how much of an impact that can then have on their future decisions of which suppliers they go for. And I think that's pretty interesting as like a market matures or starts to mature, as we've gone through the stage of everyone just trying to get as much market share as possible, climb up those rankings, but maybe not concentrating too much on keeping their existing customers as happy. And how that will kind of shake out in the next few years, I think it's going to be quite interesting.
Yeah, for sure. How would you say Tesla stacks up in that realm?
I think generally Tesla's seen as one of the better ones for after service care. Yeah.
Well, Iola, as always, it's a pleasure talking to you. Thank you for taking the time. Super informative, so we appreciate it.
Yeah, thanks for having me.